Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good weekend this weekend. Hope you guys had a good day trading today. Market is up a little bit, about 1% there on the S&P. I think pretty much across the board, we got the market up around 1%. Notably though, we did see small caps outperforming today about 2.5% on the Russell 2000. So let's dive in and kind of follow up with what we've been talking about on the weekend update or the market update video. And I think I can able to explain exactly what happened in the last 3 trading sessions, and I'm going to explain all that to you guys in this video, so you'll be fully aware of what happened in the last 3 trading sessions. So we're talking Monday, today, and Friday and Thursday, and we're going to dissect every piece of information in this video, and I'm going to explain to you exactly what happened, why it happened, why we are up here, and why were we down in the last couple days. Why did we see a gap up and then pull back? Why did we see a gap down today, but then why did we see a rally all throughout the day? So we're going to talk about all of that. I'm going to explain to you exactly why. First, I want you to know that it has nothing to do with fundamentals and economicals. Last 3 trading sessions, nothing has changed. Nothing is different. It's same, right? The narrative that mainstream media is going to push, they're just going to find whatever the story that fits the move for today. So if it's positive day, they're just going to find a positive piece of information, and then they're just going to skew it. They're going to make it fit to make it into a story narrative. Why the market is up when the market is down, the mainstream media is going to bring some piece of negative information. They're going to make that fit into a story and make it seem like that's why we were down each day. That's not the case. Last 3 trading sessions, today, Friday, Thursday, it has nothing to do with fundamentals. It has nothing to do with economicals, right? Doesn't mean that you want to completely dispute and completely ignore fundamentals and economicals. When it comes to short-term fluctuations, it's all psychological. It's all technicals. I want you to understand that. I'm going to explain exactly what happened last 3 trading sessions, right? So let's first start with Thursday, right? We saw a big correction on Thursday, about 6-7% correction. But if you've been following my daily update videos, we've been talking about how this market is in overbought sentiment, right? It's in overbought sentiment. And the market saw some great moves since these March lows, right? On the spider, March lows to the 320 before that Thursday move, market moved about 48% or 50% move. 50% here. So from here to here, 48%, right? So almost 50%, little over 2 months. So when you see a move, about 50% move, 50% move in a little over 2 months, seeing steep, rapid, abrupt correction, about 6% correction that we witnessed on Thursday, it's not a huge deal, because we understand that market does not go straight up, especially the fact that market has gone up so much that giving away about 6% is in one day, and that was dramatic. I think what happened on Thursday kind of shook a lot of people. I think because it just kind of goes back to that flashback what happened in March, right? Because in March, that March plunge, it seemed like every single day we were facing some large fluctuations, right? Market was gapping down 5, 6, 7, 8% and closing the day with a 10% loss. Like it seems like that's what was been going on every single day in March. Because the market plunged about 35% on the S&P in about a month, right? That's the fastest decline ever recorded in the history of stock market. And I think with that, when we saw fast decline on Thursday, after a gap down, it made a lot of people very uncomfortable, right? Because, again, we've just witnessed what happened in March, so it's very scary when you start to see market coming down that fast, and they start to think, okay, in this rate, how fast are we gonna go and retest the March lows? And that's just emotional, how this market is provoking your emotion, right? It made a lot of, bears really excited on Thursday. It made a lot of bulls to be kind of rattled on Thursday. But if you watch my video on Friday and Thursday and Friday, instead of being emotional, let's look at this and let's kind of come to a conclusion when it comes to trend, the overall trend. So I've done all of that. So you can go and watch my weekend video that I've done on Friday if you want to learn more about the longer term trend of things. But in this video, let's dissect what happened in the just last 3 days. So this was Thursday, right? So we talked about how in the short term, we've been talking about in the short term of things, benefit of the Dow goes to the sellers. Remember we talked about that, right? This was Thursday. And also on Thursday, we also talked about how, the market was in oversold condition. That's what we talked about on Thursday. You can go back, watch my video and check in, see what I was saying. And we talked about on Thursday that market is going to bounce. Because, you know what I mean? Market is going to bounce. Only question is, right? Is market bouncing for a complete reversal to the upside? Because you can see on May 14th, we saw that oversold level. We did see a bounce. You can hear, June 11th, 12th there. Wait, that was June 11th towards close, oversold level. And we talked about how market is going to bounce. But only question remains is, are we going to see a bounce for a reversal back to fill this gap? Or are we bouncing to cultivate a lower high before moving lower, right? So we talked about on Thursday that market is oversold. Market is going to see a bounce. We have to see that bounce is going to become a reversal before we going back up to fill the gap area at 312, 315, 317. Or are we going to go up to cultivate lower high? And we also talked about that my midterm moving average, right? That there was a good chance that this could bounce to the my midterm moving average, which is my, this is blue dotted moving average there. And that's exactly where we gapped up on Friday morning, and then we pulled back. But with that, we saw a gap up, right? And if you've been following me, you understand that when the gap gets filled, what happens? It acts as support. It was an up gap. So when the gap got filled, it acted as support. So next hour, you can see that long, lower wick there telling you that there's a lot of dip buying activities that occurred after the gap was filled. However, we also talked about benefit of the Dow goes to sellers in the short to midterm. Why did I say that? Because my short-term moving average, my midterm moving average, price is still trading below it, right? Until I see price trading back above these short to midterm moving average, I have to give benefit of the Dow to the sellers looking at the 65-minute chart. You guys remember that. That's the reason why, even though we saw a nice big gap up on Friday morning, benefit of the Dow went to the sellers, especially the fact that we're still below my midterm, my short-term moving average. The wind is blowing to the downside. That's why we saw a pullback. And then what happened on Friday and what happened towards the last few hours of Friday trading, right? This was Friday's trading, right? So this was first hour Friday, second, third, fourth, fifth, and sixth. So towards last 2 hours of Friday's trading, what do we see? We see about a little bit of move to the upside. Why? Because we're still dealing with oversold level, but you can see some point we did see a bullish cross. And also we talked about my long-term moving average, right? This is my longer-term moving average looking at my 65-minute chart. Yes, benefit of the doubt goes to sellers that I talked about on Friday, right? However, the longer-term sentiment is still bullish as my longer-term moving average is rising, as you can see. So even though we saw a pretty steep decline here, and I think that was about 6% too, I think this is more of a 7%, but guess where we found support? Right at that longer term moving average. That was the same time when we saw my oscillator hitting the oversold level, and we saw my oscillator showing you that bullish cross. Same thing happened right here. We saw my longer term moving average hovering in that vicinity, right? 297, 296, and 300 area. And I saw that oscillator showing bullish cross. But this time, with the short-term moving average, mid-term moving average, benefit of the doubt went to the sellers, while the longer-term moving average told us that benefit of the doubt went to the buyers. So there was a little bit of battle going on. Short-term, the mid-term, bearish sentiment. Longer-term, bullish sentiment. So to compensate that sentiment, we did see first hour gap up, but because we're oversold and we saw bullish cross on the oscillator, and because of the short-term sentiment is bearish, we pulled back. But because longer-term sentiment was bullish, bulls did come and did see 2 hours of rally on Friday after seeing, you can see my oscillator moving, curling back up, seeing a bullish cross right here after this thing came down to oversold level, after it hit overbought level, right? So then what happened today? This morning, we saw another gap down. Because why? Because again, we're still in the short term. Benefit of the doubt goes to sellers. Short to midterm, and I've covered this. I've covered this on the weekend video, right? The market update video. The benefit of the doubt goes to the sellers in the short to midterm, as long as the price is below, my short term and my midterm moving average. And you can see my short term moving average coming down, is curling down. You can see that the squiggly line. So we got very, very close to that level. That's where it closed on Friday. So short to mid-term sentiment being bearish, we saw another gap down. But where did it gap down to? It gapped down to exactly where that longer term moving average is residing, right? Here. You can see exactly that's where it was. Right there. But keep in mind, despite the fact that we saw a gap down today, right here. So this was a gap down. This was this morning right here. I'll make it a little bit more interesting. So right when it gapped down, you see that right there, right? At 297, what was my oscillator saying? Still rising. Do you see that? They're still showing you that bullish cross signal, right? They don't flip back and forth a lot when you're dealing with extreme oversold sentiment, extreme oversold condition. That's what we're witnessing last 3 trading sessions, especially on Thursday and Friday. And you can see that that cross definitely gave us that, okay, bears are working with, right? Bears are working with higher energy. Right? They brought it down pretty hard. That's a 7% correction, man. So they're kind of getting tired. They pushed it lower one more time. This morning. Again, why? Because mid to short term sentiment, it's still bearish. So we gap down. But again, after dealing with oversold sentiment. You know that bears are tired. There's only so much they can push at this point. Not only that, we're dealing with that longer term moving average. It has a pretty impressive resume, which we talked about. And we've been tracking this longer term moving average pretty much throughout this entire rally. There, and you can see right here. It has pretty impressive resume. And every single time, especially when you're dealing with the oversold condition, as my oscillator told us that we are dealing with the oversold condition, meaning bears are tired after bringing this thing down, 7% decline in just one day. So what happened? Despite the fact that we gapped down, with the mid to short term moving average telling us that benefit of the Dow goes as sellers in the short to mid term, bears pushed that one more time, but they're tired. My oscillator is showing bullish sentiment here. And that wasn't enough. They needed to rest. And look like may potentially be an exhaustion gap down. Because a longer term moving average was in that vicinity. Keep in mind also, that's a level that I given you yesterday on the weekend video. That's the level where we saw gap area. So we got the gap area, which is 297 area, right? I gave you these two levels like that yesterday. And that's the level where we saw what? The longer term moving average. Not only that, I gave you this, I told you to put your rising pivot like a box. You don't wanna put it, in a thin line, because this is gonna be the vicinity, right? Vicinity of that congestion zone, right? That rising pivot. So we got that rising pivot. Also, what level did I give you on Friday? That 50% retracement, right? That was that level. So we got that longer term moving average there. We got the rising pivot there. We got that that gap area there at 297. We also understood that this market was bears are tired. They're working with oversold condition, and we already saw this oscillator turning back up despite the fact that we saw gap down this morning. And then what happened? Throughout the entire day, whole day, we saw this market rally. That's a first hour. That's a second hour. That's a third hour. And then you saw in the fourth hour, why did we see a pause? Or, you can see that at one point, there's a long green body here, but you can see the long upper wick. Why do we see first, second, third on the fourth hour? Because it looked like, okay, so first hour we continued higher. Second hour we continued higher also. Third hour we continued higher. Why is it on the fourth hour we saw a little bit of decline towards the end of the hour on the fourth hour? Why is that? Can you guys see why that happened? Well, there was a gap here, right? There was a gap down. What happens when the gap gets filled? It acts as resistance because it was a down gap. Remember, this was up gap. So when the up gap was filled, what happened? Long lower wick. This was down gap. What happened? Long upper wick. And that's the level coinciding with my what? With my short-term moving average. That's not a coincidence. That's not a coincidence at around 304 level that all of a sudden this rally kind of paused and we show some tail at the top there, giving you that kind of a shooting star like candle there, right? Because gap got filled and then we got a short-term moving average there. I actually thought they were probably gonna like hang around either in this vicinity, maybe pull back a little lower. That's actually what I was thinking. I did give you guys midday update on my Twitter account and stock tweets. So I kind of felt like, okay, this is probably level because you can see that short-term moving average we've been tracking this entire time has also pretty impressive resume. Look at that, support. Look at that. So support, and resistance, right? So old support becoming a new resistance. So I thought maybe we'll hang around 304, we'll close in that vicinity, or maybe pull back a little lower. I thought we're gonna be closing somewhere in this vicinity. I was wrong and we pushed higher. So now what happens is that level. What happened with that? What happened with that move? Do you know what happened when we saw the 5th hour thrust? We have now higher high. We no longer have a lower. See, look at this though. Look at this. So this was lower high, lower high, lower low, lower low, lower low. So market was in a bearish stance, bearish downtrend in the short term of things. We also established that looking at the moving averages, right? Oops, there a second there. Okay, so we had that lower highs and lower lows. Do you see that? And what happened was with that 5th hour thrust, we no longer have lower highs anymore. What do we have now? For the first time in the short term of things, we got higher high. Do you see that? Now you can look at this like this and say, that's not a lower high anymore. That's a equal high. When you see an equal high, what you can say is this. We are no longer in a downtrend in the short term. And to midterm, we're now in a consolidational phase. We're now kind of basing out here until bears take out new low 297. But as long as they remain in this vicinity, we got to look at this as no longer in a bearish downtrend. We're now basing out. But remember how bears and bulls how they like to operate, right? Bulls like to operate in this way. They like to take its time, absorb volatilities by consolidating, moving sideways, right? And then they look for the right timing before thrusting to the upside. That's how bulls like to operate. Bears don't like that. Bears don't like moving sideways. Bears don't like consolidations. Bears don't like moving, just hanging around. Bears like to bring it down as fast as they can. But you let bulls hang around, especially the fact that we are in a bullish sentiment here in my oscillator, and we just found support at my longer term moving average. If you let bulls hang around, right, they're going to try to bring it up. So it is no accident when we thrust above this resistance at 304, that's a 5th hour. This is last hour. We stopped short right at my midterm moving average. Do you really think that's a coincidence? This whole time I've explained everything to you in this video, last 3 hours. It has nothing to do with fundamentals. It has nothing to do with economicals. It's all psychological. It's all technicals. It took me 25 minutes breaking everything down piece by piece so you can fully understand what has been going on. It's no accident. It's no coincidence. It's no mistake that on the 5th hour, we pushed up to about 307, and then we started slowing down here. Why that moving average? Because that's the midterm moving average. That's where we find some resistance here. That moving average is now acting as resistance here for now. And then on the 6th hour, which is the last hour, we saw a what? A decline. That's the last hour. You see that long lower wick? That tells you at one point, this thing, right? At one point, this thing it looked like that. It was bearish red candle like that. That's what it looked like at one point. Okay, and then towards last 20-30 minutes, we saw price getting back up. Why though? Why did we do that at 304? Prior resistance acting as new support. And I want you to watch this. My short-term moving average right here, the squiggly line, guess what happened on the 5th hour? We thrust above it. So now what was resistance before, that squiggly line, is acting as support. And we brought it right back up. And it's no coincidence. We got up right to that midterm moving average, and then we faded a little bit. So does that make sense? Obviously, you know, when I'm looking at the market, I just kind of look and understand. But when I'm trying to like just dissect everything, trying to explain everything what was going on last 3 days, it took me about 25 minutes, as you can see, just you know, explaining to you what was going on, right? And so now, okay, so now, what now, right? So here, this video got much longer than I've anticipated, so I'll try to end the video quickly here. So first of all, we have to understand the fact that we now see this stochastic in my oscillator here is thriving to the upside. So there's a lot of bullish momentum according to that. We found support on my longer term moving average, and we saw a nice bullish move there. We finally gotten above my short term moving average. We've cultivated a higher high for the first time since this decline. We're no longer in a bearish downtrend in the short term. We cultivated equal highs here, so it looks more like a basing out reversal type of consolidation here, right? As long as 297 doesn't get taken out, that low, right? So right now at this point, only thing bearish I see is that midterm moving average, right? We got more overhead resistance, overhead supply here around 311. This whole gap area is going to act as resistance. So we have resistance at 311, and then we have resistance at 307, which is that midterm moving average, that's where we still found resistance there, and that's where we're finding resistance now, at least so far. So going and we're finding support in my short-term moving average. My short-term moving average was acting as resistance here and here and here. Now seems like it flipped back to support the buyers. So what bulls need to do is break above this midterm moving average and challenge the gap at 311. If I see the price action start doing this, like that, and that midterm moving average going like that, I have to give benefit of the doubt to the buyers in the short term at that point. As of today, benefit of the doubt goes to buyers in the short term because now it's trading above my short-term moving average. Benefit of the doubt goes to the sellers, however, in the midterm because why? It's below my blue dotted moving average. Benefit of the doubt goes to the buyers in the longer term because we found strong support in my longer term moving average there, while my stochastic oscillator is rising to the upside, right? And looking very strong at this point. And when they start rising like that, going all the way back to April, right? They usually go all the way back to at least some of these levels here, 70s or 68 readings. So what bears need to do is at least make sure bears don't go anywhere above, don't reclaim above that midterm moving average, and trying to break this short-term bullish momentum that buyers have gained by breaking below, right? Breaking below 297.66. That's what bears need to do if you want to see further downside. You want to see this market going to 290, 280s, it must break below 297. But the certain current momentum is actually a little bit more bullish at this point. So we just got to take it one day at a time. And bulls need to obviously get back above this midterm moving average and then start challenging this 311 there. So just to reiterate, short term, benefit of the doubt goes to the buyers. In the midterm, for now, as of today, as of right now, things can change tomorrow morning. Benefit of the doubt goes to sellers. Now they were right at this resistance. Last time when we were in this resistance, we did see a pullback. So we don't know yet. We'll know more tomorrow, and I'll update you guys on tomorrow on this. Longer term though, benefit of the doubt goes to the buyers. So with that recent bullish run right here, a lot of things have changed, right? So that's what happened in the last 3 days trading sessions, just dissecting everything to explain why we saw those fluctuations, why we saw those intraday moves upside and downside, and why there were gap downs but it got back up, why were there little pullbacks. All of that was just explained to you in this video. So I'll come back to you guys tomorrow, and I'll update you guys on this. We'll follow up and we'll go from there, right? So you guys have thank you for staying for a 30-minute video there. I really didn't mean to go this long, but there's a lot to explain to you, and I didn't want to leave any information. I want to explain every little piece of information, every single hour of what happened in the last 3 trading sessions, and I thought hopefully this has been helpful in your own analysis as you navigate this market. So you guys enjoy your evening, and good luck trading tomorrow.